There are many investors, contrary to popular opinion that there's little money, a lot of projects. There's actually a lot of money and very little projects that can make money for the investor.
Hi everybody, thank you for watching Value.Tokenized. It's a pleasure to have you with us. And today, as our guest, we have Yael Tamar, the Chief Marketing Officer of SolidBlock. And hi Yael, it's a pleasure to have you.
Hi ladies, pleasure to be here. Thank you for inviting me.
Thank you. And we have a lot of topics that we want to discuss with you. And I think one of the things that I want to start with, because this is also your focus at SolidBlock, is tokenization of real estate. And yeah, to start with, this real estate has been one of the major use cases for tokenization this year and the previous year as well. And so we work building in Miami, Fundament Group, Fund Tokenized in Germany, and lots of other use cases. And why is it so popular?
Well, first of all, people are looking for ways and methodologies to raise funds, and also to create liquidity for markets. It's not only important to raise funds at the initial startup stage, as you do with private equity, for VCs and so on, which is also extremely difficult, but also at a later stage, companies are becoming more limited in raising funds. They have to revert to bonds and going public, stock market influences, and so on. So everybody's looking for this perfect financial instrument that could be used to raise money in a cost-efficient manner, right? Everybody's looking for cheap money. So what are basic components of this cost of capital? Well, number one is how easy it is to find investors, right? So there are many investors, contrary to popular opinion that there's little money, a lot of projects. There's actually a lot of money and very little projects that can make money for the investors. And those two have to meet. So that's why markets exist, and that's why people are in search for these perfect or near perfect liquid markets where the cost of capital is low. And last year, everybody tended to think that this will be the security token market. And there have been some predictions made that 2019 will see a surge in SPOs, which didn't happen. We didn't see that for a variety of reasons. And these markets largely stayed illiquid. So I'll be happy to talk about why I think that is the case. Nobody really knows. We can only speculate and hope that will change.
Before turning to the question of illiquidity and whether we'll really see at some point true liquidity for these assets, which is one of the biggest promises of tokenization. I would love to ask you tell us more about SolidBlock. How would you explain it to maybe somebody who's not very familiar with the blockchain as a concept, as a technology, what you're working on?
Sure. So I usually use a metaphor from the animal kingdom, and I say, real estate is like a big elephant, which is bulky and heavy and moves very slowly. It has its advantages because it's big, it's hard to, nobody messes with the elephant, right? It just keeps going. And yet, it's not as fast as efficient as other animals, in order to get what they want. So what we do at SolidBlock is we take this massive elephant, which is a metaphor for real estate. It's a big market that gives solid returns to the base assets, on top of which we can grow up. So we take this market and we add in the elements of efficiency, transparency, and liquidity. So we turn this elephant into half elephant, half cheetah, which is the fastest and the most efficient animal on the planet. So that's the metaphor we use. But in reality is that this market hasn't been really transformed in the last 50, 70 years or so. People are still going out looking for assets in the same way they were looking for assets. They're putting money or due diligence, putting their savings, and most people in the world, when they think about investing in something, they invest in like a single family home, get a mortgage, and so on. And very few think about, let's find a project we can be a part of, we can invest in. That trend has really started about 2-3 years ago. Real estate crowdfunding very prevalent in the United States, not so developed in the rest of the world. So what we want to do is we want to take the concept of real estate investing and turn it into more of like financial market investing. So it's similar to stock trading. Majority of Americans, over 50%, trade stocks on a regular basis. So, everybody's checking out their little apps with stock prices, and there's a lot of information out there about stocks and companies and technologies. When a company goes public, it has a responsibility to release frequent updates and so on. So we want to have something similar for real estate without the complexities of really going public as a company, to have a private placement, but with the same amount or similar amount of information to fuel trade, and with flexibility to trade real estate parts, fractions like stocks, and with transparency provided by blockchain, as well as security provided by blockchain, and some capabilities to predict markets and to make everything more efficient with artificial intelligence.
And you mentioned crowd investing in real estate, the current platforms that have been existing for 2-3 years. And what is the main difference? So what does current crowd investing in real estate look like, opposed to what you are creating?
There are many companies and websites out there and apps where you can go look at an asset. If you like the asset, you can invest from $500 or more. I've invested in a few assets myself in the US with these apps. However, you don't have very little guarantee that all the information is accurate. You don't really know. It's not fully transparent. You're happy when you're getting, some $2-3 a month on your investment. If you have $500. I didn't see any grand, very interesting projects, global projects on these apps. And like I said, I didn't have guarantee of return or certainty, or as well as a lot of information on these markets where I'm investing. So the difference between that and tokenization is that now with tokenization you can actually take truly big global projects and make them possible. Especially when we have investors, millennials, who are interested in become really familiar with whatever they're becoming a part of, and be really feel really a part of it. And it's something they can talk about on at a party on a Saturday night, like, oh, I invested in this cool hotel in Athens, or I invested in this huge commercial project in Bali, or whatever, right? So there's an element of that, and people are really concerned about their money, where they're putting their money today. So if you want this to become like a mass, to have a great effect on the market, you need to give people confidence. Now, going back to the subject of liquidity, it's really driven by institutions, pension funds, endowment funds, like large banks and institutions that are underwriting these projects. So they need to have a vehicle that gives them this confidence and gives them the tools to trade. And I believe that blockchain can give them what they need in order to really create a big, stable, as they say, $30 trillion market.
And you mentioned investments in like commercial real estate, like as well as residential real estate. I just remembered that you recently wrote a blog post on SolidBlock website, and actually you were talking about the future of both like a residential real estate investment the next year. Can you maybe share some highlights of this article? So where the future for this investment lies? Like, is it blockchain? Is it something else? What tendencies do you see here?
Right. So if I remember, it's been a while since I wrote this blog, but residential real estate is very interesting because people are no longer interested in living necessarily in a place where they own. People move a lot. The workforce, is very global. So buying a house, buying an asset is more of an investment, and you can live absolutely anywhere. You can even live in a trailer, and buy an apartment and rent it out. Now, when we buy an apartment and rent it out, there's a lot of complexities. It's not for everybody. There's a lot of bureaucracy, and then you have to maintain it, right? So it's much easier for me to buy a piece of real estate, in New York, in Chicago, in London, in Paris. It doesn't have to be an apartment. It can be just a fraction. And then to have somebody else rent it out for me, or maybe that's in a project that's developing, and then benefit from the fruits of the sale of that project. So if that were possible, then we're going to see a very, very different market forces here. Because you're going to have companies like developers that are becoming asset managers as well. So they develop a project and then they manage, and then they treat the investors not as apartment owners as they would. And instead, they will treat them as basically either they're creditors, right? They're somebody who loaned them money or invested in a project, so they're investors. And that will require different type of players. I think asset management is really going to be key in creating higher profit levels in real estate. So that's one big change that I'm seeing, that I think that we'll see. Institutions are used to purchasing commercial real estate, and it's going to be interesting to see if they're able to raise funds from accredited investors, or maybe even in the future from retail investors, so that instead of me putting money in a pension fund right now, which gives very little return, and also it's highly illiquid, for me to take it out, I have to go through a lot of hoops. And also, the government requires you to wait until the age of 65 to take out the money, or to then buy very big taxes. And so instead of that, I can look at this specific project and say, I want to put my money to that. And then you can create a totally different scheme. By the way, this is not on the blog, this is just brainstorming right now. You can create a totally different scheme of putting, maybe incentivize people to keep the money in the pension fund, even through this global economic uncertainty, who knows what's going to happen in the next 30 years. But have them take some money immediately, some profits immediately, they can benefit instead of going to the bank and taking huge loans at really bad interest. And, the student loan crisis, people are going bankrupt. And the whole just to finance people's lives, they have to get stable in those loans, and that can be changed through tokenization, not only of real estate, but of other physical assets that you can get people investing in instead of taking loans.
Or for other assets, for example, like equity of startups. Going back to the question of liquidity, so a big argument that is being used a lot these days, that if you invest in a startup, now then you have to wait, or if you invest in a venture fund, then you have to wait for many years to wait for an exit, to have it acquired, or to have the company go for an IPO. So this tokenization enables the creation of the secondary market where these assets can be traded. But that's not entirely true yet, and that's what most people argue about. So, it's not there yet. This promise
goal, like it's not here. So basically, the liquidity is not provided by tokenization. So,
my question was more like, if it is so crucial, this promise of the active secondary market for real estate, or the biggest use case and the biggest opportunity it provides is exactly to be able to, just receive this, dividends from the rent and just be happy with it.
It's not a promise of liquidity, but just providing this vehicle for selling stock on the secondary market. But you have to interest big investors in what you're doing. So if VCs just provide, let's say, a vehicle to sell stocks, they may just interest the investors within the VC fund. Now, if you want to really create liquidity in the market, there are many forces at play. First of all, in this market, there's almost no analysts. There's almost no information. Startups are very volatile and unstable at an early stage. At a later stage, Series B and C and mezzanine and so on, you can certainly be more successful in creating liquidity. And if you have big tickets, even if you have a big ticket investment, $30–50 million, it may still not be enough for the market to really start playing with this stock, because institutional investors don't get involved until maybe $200–300 million, $500 million. So what I want to see is, let's say, VCs producing a stock of their own, a security of their own. Let's say a portfolio as a whole is worth $1 billion. Now that's already very interesting for the investors. So now you're going to see a lot of tokenized funds. And that's what you actually are already seeing. Companies like Harvard are at the forefront of tokenization of funds. And we're going to see that for sure. So whether that's going to help individual assets, it's going to help that VC fund raise more money if they're successful. Now, there's definitely an economy of scale for startup success just because of the statistics. The more startups you invest in, the more likely you are to be successful, because you might catch, the big fish in your net. So whether it's going to help, individual startups, that's questionable. So, this systemic tokenization and the practice of tokenization at the moment is very marginal. Very few people understand it really, and understand why you need it. So we advocate for tokenization for real estate specifically, because their benefits are much more clear. There's very little access right now to big projects by most people in the world. Owning property is universal right. Right now our play is mainly accredited investors, but we're hoping that will change in the future. But tokenization and real estate can put this big complex industry to a new, real estate 2.0 type of asset, where we can be really traded. And for that, we need to get big institutions on board by providing them, the tools, which will plug into whatever trading they're doing at the moment. Number two, the whole industry of analysts. There are no analysts right now out there that are able to understand or trade, analyze security tokens. So, in the real estate, obviously, you have a lot of analysts analyzing real estate assets. So, you kind of need to give them additional skills. And finally, you need to provide kind of the security and reliability. You have big players coming out and adopting this technology. So, until that happens, it's a catch-22. You will not issue security tokens because there is no point, because you won't be able later to trade the tokens. And the process at the moment is complex and expensive, partially because of regulation, and also because there are very few service providers that can do this.
Yeah, actually, it's very interesting. You mentioned tokenization of funds, and this is like a whole separate topic. We actually did a panel a couple of months back with David Benizer from River, like Lambert Paul, and then Pavel Cherkashin. It was very interesting discussion, and one of the topics we focused on was that another promise of tokenization is actually democratizing the venture capital finance for like many people, because previously and now actually a lot of like ordinary people, they can't invest. But actually, it turns out that still while tokenization can really bring in a lot of benefits in simplifying the process for fund managers. It doesn't work with large numbers of investors. So it's still both legally and actually, like from different perspectives, it's not entirely possible to make the tokenized funds accessible to wider audiences and bring in this retail capital. What's your take on this? Do you think maybe like in future it will be possible, or it will stay like as it is, but still just be simplifying this model for managing these funds as we have them right now?
So there's two forces at play. On the one hand, you want to give people the possibility to accumulate wealth. On the other hand, the government's goal is to protect citizens from anything ranging from scam to people who just don't know what they're doing. They're taking someone's money and they're gambling with it, with whatever intentions they may have. So there needs to be a balance out there. And I think that this balance we're seeing in, let's say, an American regulation called Regulate Plus, which allows you to raise up to $75 million from retail investors. And of course, the company has to go through hoops, creating a private placement memorandum, creating checks and balances, and convincing the regulator that they really have not only good intentions, but also they have the capability to manage this money and appropriate it correctly, and the ability to see the business through. So all of these things need to be in place. Now, I believe that blockchain really helps us solve some of these issues. So you can create smart contracts for kind of putting the money in according to different milestones. You can create smart contracts to distribute wealth or to buy the company's assets. In case the company goes bankrupt, you can create a right balance of the capital layers, preferred, common, stock, and so on. So I think we need to have a whole overhaul of this industry, but I think it's possible to let retail investors come in on these on some projects where maybe there is a track record, or maybe there is some sort of checks and balances system, which allows retail investors to go into relatively risky type of capital. Real estate is not considered to be a risky capital, but as soon as it's placed on blockchain, or as soon as it's securitized and becomes more liquid, now it goes into this category of accredited investor only, and there's lots of hoops to go into, and many countries established a sandbox for us to work with regulators to figure out a way to get investors to come in safely. Maybe in a few years it will change, and there will be a good model that will allow for this.
And I think probably one last question for today. So recently, a lot of European countries like Liechtenstein, for example, and Germany have been Luxembourg have been adopting new legislation around blockchain, around tokenization. So do you see that other countries, other regions are following their footsteps, for example, including Israel, where you're based?
Israel usually follows the footsteps of the SEC in America, and they're super cautious, and the SEC approach is actually not so forthcoming. The SEC approach is, well, we warned you, you should do whatever you want for now, or not whatever you want, but whatever you think is right, and we'll come after you later if we think you did it. So, and they don't want to commit to anything in the beginning, so the same as Israel. We're looking to see what's happening, and especially with the SEC. So Israel is, on one hand, is opportunistic when it comes to financial sector. So, if we see that there's a big potential for future revenues, maybe from taxation or from new startups coming into the field, then we'll encourage it. So say for the ICOs, there still hasn't been like a very clear stand. There have been a few papers issued, so kind of waiting to see what the SEC is going to do. However, when it came to taxation and when it came to regulation of trading of securities, Israel was very, very clear on what can be done and how and when you should be paying taxes and what and so on. Right? So we don't miss this opportunity. Now, with these countries in Europe, it's very interesting what's happening there because, on the one hand, it looks like they're reducing the regulatory burden on tokens of a certain kind. But on the other hand, they're also creating on the asset class, they're very forthcoming with the regulation and creating buzz and creating new businesses. It kind of looks like that we want to bring in a lot of new business coming in. So I really don't know what Israel's going to do. My feel is that we're going to wait and see what happens, especially in the U.S. And the U.S. stand is, we want to let the accredited investors do whatever they want to do. It's very straightforward. It's very easy, the regulation for accredited investors in the U.S. You basically just have to create a private placement memorandum, comply with whatever rules for marketing are, file a few forms for exemption, and then you can go and raise from that public. Now, I still haven't seen the European countries allow retail investors to come in up to a certain level, 5 to 8 million euros, with crowdfunding, and it has its own limitation, by the way. You can only invest up to a certain amount when you do crowdfunding. Each investor is limited to either $5,000 or whatever amount within a specific country is. So these countries do like there's lots of buzz, but in reality, not much is changing. So I think it's still encouraging though that we're moving in that direction.
There's just one thing I would like to add, because, for example, what Luxembourg and Liechtenstein did is they really simplified the circulation of tokenized securities, and maybe when the companies don't have to take this, get all this pains trying to work on some legal workarounds to actually schedule it this way. I think this is very encouraging, and still maybe this is how we will see other, at least European countries following, and that's where it will be simplified. And then the regulations regarding the crowdfunding, it's still a different topic, but then maybe it will follow in footsteps as well.
Yes. So I guess when you simplify something like exchange of tokens, you'll be able to see better options for liquidity, more liquidity in the market. So that's definitely a good thing. It all starts with issuance, however, with creating kind of, I think actually what they're doing is good because they're creating more confidence in the public to go in and invest in these securities. So ultimately, it's definitely increasing the market. So let's wait and see and talk in a few months and see if that really made a difference.
Right. All right. Yeah, I think that was it for today. Yael, thank you so much for joining us.
Okay, thanks. Thanks, Masha. Thanks, Marina. And I'll see you soon in Malta.
See you soon in Malta. Okay, bye. Bye-bye. And this was Value.Tokenized with Masha. This is Masha. And this is Zania. And thank you for watching, everybody. See you next time.